Hey all, it's Jeff, No Zoom Mondays. Hey, I had a fantastic question provided to me this week that I want to answer during this week's video. The question was this: given the market turmoil that we're seeing today, should I retire? There are many people that are coming up on that retirement date and they're wondering if now is the right time. But before I get into answering that, please go ahead and hit that like button and also subscribe if you're not subscribed to the channel, as well as hit notifications to get updates, know when the latest videos have come out. Thank you. So going back to the question, given all the market turmoil that we see, should I retire today? And so let's look at the market turmoil first, right? You've got multiple things happening, very dynamic today in regards to many threads pushing on the market. Top is you've got inflation, right? You've got a huge amount of price increases on the things we consume. Fed is actively looking to increase interest rates to slow down our demand for those goods. So that's affecting the market today. We've also got a recession potentially happening. Given that activity by the Fed, I think the first quarter's GDP, gross domestic product by the United States, is actually negative, and I think that it could potentially be negative for 2 quarters, which would reflect recession. Maybe mild, maybe not exactly sure until some more data shows up, right? Add to that, you've got, our pandemic is still around, and it's caused huge problems over in China right now, causing additional supply chain craziness. Respect to China's zero COVID policy. They're shutting down major cities all at a time, 5-10 million people at a time stuck to their houses, forced to be there to try to reduce their COVID potential ramifications. And then add to it all other uneasiness in the market today with respect to war that's actively going on between Russia and Ukraine. Tons of turbulence, and the outcome is still TBD. So there's a lot of things that will cause volatility in the market, which, guess what? Yesterday the market was up 900 points, and today, last I looked, it was down 1,100 points. Specifically, I'm talking about the Dow. Crazy, that much volatility, but it is what it is. And I guess to add to that, I've even saw some headlines saying that this is the fastest drop of the S&P 500 in recorded history. Lots of volatility. And so that's got fears up, I'm sure, with respect to whether one should retire now or not. And I understand that. But let's turn this around to answer the question and walk through some fundamental questions to help others make the decision whether now's the right time to retire or not. The number one question: is your financial house in order? By that I mean, at this point, even with the market whipsawing like it is whether or not you have the right size portfolio. So if you're going to use the 4% withdrawal rate or something close to that, then you need to make sure you have 25x in your investment portfolio from your expected spend. That means that if you expect to spend $50K a year in retirement, you take 50 times 25, and that's $1.25 million your investment portfolio would need to be to support a 4% withdrawal rate. So ask yourself, am I there? If you've got $100,000 you're hoping to spend in retirement every year for your expenses and your fun and adventures and everything, then you'd want to double that. You'd need $2.5 million. So again, just ask yourself the question if you're there at this point. The next question you'd want to ask yourself is, do you have any debt? And the question around debt really targets your fixed expenses. Conventional wisdom in the market today says you want to try to retire with zero debt. For example, in my case, 10 years before I got to where I could retire early, I decided that cash was king, and that my new motto was going to be, if I didn't have cash, I would not buy it. And that's how I'm actually funding my retirement. Obviously, this point is with cash, so it worked out as a good strategy 10 years prior to make sure I was following that. Last question in the financial house, is it in order, is do you have at least 2, maybe a max of 3 years of cash set aside for the chance of an emergency, whether that's unexpected bills coming in, or really more importantly, if the market kind of does some crazy things to us, gets into a recession where the market is negative for a while, you want to be able to pull cash out of that fund, use that as your spend the year that you'd be in at that point, rather than pulling from a portfolio that is now down. So that's the question. Do you have at least 2 years, maybe more, of your cash in an emergency fund that you could have access to? That would help you make the decision whether now is the right time and should you retire. I know there are other personal finance things that Beth and I did along the way to get to early retirement, and I offer up that the video is here. If you haven't had a chance to watch it, it might be a great time to do that, and the link is in the upper right-hand corner. Okay, so those are the financial house questions you got to answer before you could make the choice to retire. The second thing one would want to ask and probe around is the idea, have you been through down markets in the past, and what was your response? And this is critical, given retirement means really no direct income, no W-2 income, if you will, for most everybody that goes into retirement. So then what are you going to do if the market turns on you then? The question is, last downturn, what happened to you? What'd you do? Did you sell? Did you hold? Did you buy more? I would offer up that selling in a down market is really, really a tough thing to do to allow you to stay in retirement a long time. Definitely don't want to be panic selling. So if your natural response in this climate is to sell, then I would offer up your portfolio doesn't match your risk tolerance, and you need to take a look at what you've got in your investment portfolio before you retire, because selling when the market's low is a bad strategy. However, if you held in the previous downturns or even bought, better yet, then I would offer up that you probably have your risk appetite is equivalent to where your portfolio is now. And that's a good thing, especially in retirement, because it's not if we're going to see a downturn when we're in retirement, it's a matter of when. And so we're going to have to be prepared for this when it happens. Been in retirement, 18 months now, and we're probably working our ways towards a recession. And I'm glad that my normal risk appetite is high, meaning I do not sell. I'm a long-term investor. I still see 30 plus years on the clock for me to be able to enjoy with the portfolio I've built. So my portfolio is in a place that meets my risk tolerance. The other thing that I would offer up is, what is your portfolio? What does it consist of? Is it diversified? Does it have stocks and bonds? Within that stock allocation, does it have different assets of stocks, value companies or small cap companies or international companies, etc.? That diversification is going to help you weather the storm and produce better results on the uptick should we get into a recession now. And so I offer the following example. Over this last week, as I mentioned, this question, should I retire now, came up. But I was talking to somebody at the time that had a portfolio of 5 or 6 stocks they were betting on to keep them healthy in retirement. Those 5 or 6 stocks over the last 3 or 4 months had reduced by 30% when I was speaking to the person not a couple days ago. Today it might be down 40%. But that point, 30-40%, if you're losing that kind of return, it might give you pause to get into retirement. In my case, all I'm looking to do is make market returns, both on the upside as well as the down. In today's market, down 1,100 points, I see that my portfolio year to date is only down about 9%. It is what it is. I'm not selling it. I've got an emergency fund, should this last through the end of this year, to be able to pull money from that for 3 years running, and I should be okay, given the history of the market. So that said, the question really boils back to you. What is in your portfolio and how diversified are you? If you're interested in a diversified portfolio, one like I set up, I put together another video and the link is up top. Help me generate an investment portfolio, $1 million plus of assets to allow me to get into early retirement. So hopefully it will do the same for you if you're interested. Take a look at that video. Lastly, I have to show this picture because I think it's critical for all of us to see. And if you're a long-term investor, you probably already know this, but it's worth repeating. This graph that you see is actually built by, I pulled it off of Charles Schwab. They do a nice set of analysis. In blue, you'll see the bull markets, and in red, you'll see the actual bear markets of the market since the 60s. So about a 60-year spread on this graph. Things to note here are, one, that the average duration of a bull market versus the bear market is 5x. So there's 5 times more length of time in a bull market than there is bear. So that's good news. Investing is actually a good thing rather than keeping your money in savings accounts. The other thing to note here is that the average returns during a bull market are 200%, or better yet, it's 2x. On average, in every one of these bull markets that you see here, all the blue, those things will on average take your money that you've invested and multiply it by 2. If you had $1 in it, it'd be worth 2. If you had $1 million, it'd be worth $2 million. So huge. That's a huge return. On average, that's what you can expect. And the last data point to note, even back to the bear markets, you can see here that on average, it is 446 days on average for a bear market. And if you put that into months, that's 14 months. So anybody with 2 to 3 years of an emergency fund on average would have enough cash on hand to be able to outlast the average bear market. Okay, the third question to ask yourself is how flexible you are to fulfill your needs and wants. It's important to know the answer to this so that you'll know how well you'll do in retirement should things get tight. Example of this. On the needs front, let's talk about your basic needs, just the basic ones. You need shelter, someplace to sleep. You need food to eat, to live, and you need clothing. Those are the 3 basics. Everything else could fall into the want bucket. I want a car, I can afford a car, and off I go. I don't want to take public transportation. I want a second home because I want to be able to go to southern Colorado and enjoy the snow in the winter. I want to have a horse and race it and ride it and do all these things. But again, those are wants. Those aren't your absolute human needs. So I would offer up the more flexible you are to fulfilling both of these, the better chances you'll have in retirement in a situation where things might get tight and you can reduce your spend, consume only what you need, and remove the rest until things get better. Let's go through a quick example. Food, it's an absolute need. We got to eat to live. However, are you a type of person that can eat oatmeal, peanut butter and jelly, cook at home? Are you a kind of person that has to and wants to go off to fine dining establishments and eat out at restaurants? Those are 2 different needs and wants, and they both satisfy the need, physical need, but solving it and spending differently depending on which one you pick. Again, if you have the flexibility and want retirement more than you want that, for example, in this case, fine dining, then you can reduce your spend, do what we just spoke of, cook at home more often, eat less, only the basics, and you can get by just fine with a lot less money. So how are you in regards to flexibility? The higher the flexibility, the more I'd lean towards a yes towards should I retire on that question. The other thing is, how do you fulfill your wants? If it's one where you have to buy to fulfill all the time your wants, buy a second home, buy a boat, buy a horse, I would offer up all that could be done a different way and more cost effective. A second home could be done via Airbnb for a week. And you could go to multiple places in the year or multiple places in the world. Get a boat and rent it. We used to do it all the time when we were younger with my kids. Had a blast. Fish, ski, you name it. But we rented rather than buy. I know a boat's a depreciating asset that's anchored, not to be funny, but an anchor around your neck in a lot of ways. So the more you're able to minimize your spend on wants and be able to satisfy it appropriately based on the spend you have and can have, depending on the market, obviously, the better off you'll be. The last question I would offer up that you should ask yourself before you decide to say yes or no to retirement right now is, do you have plans to retire to something rather than just retire from? So I can understand being sick of a job, sick of the old status quo, burned out, and jumping into a big new adventure. That's certainly what I did. But I would offer up that if you have plans for what you're going to do in retirement, what you want to go do next, the better off you'll be, the happier you'll be actually in it. So it's a question only you can answer. I jumped from a job and burned out, not from the people, but from the actual rat race, the lifestyle I was in, to something to try new things. And we've been adventuring ever since and loving it. So that's what we jumped to. Hopefully you've got some thoughts about retirement and what the fun is that it waits for you, and so you can answer yes to that. Okay, so at this point, questions boil down to retiring or not. It's definitely a personal decision. Top level questions: do you have your financial house in order? If you can say yes to the questions there, 25X, emergency funds, correct. Diversified portfolio, check, check, check. The other questions around, have you been through the volatility of the market before and what did you do? Is your risk tolerance equating to your portfolio so that you'll be fine in retirement with the assets you currently have? And then the last big question was around your flexibility with respect to fulfilling your wants and needs. If you're flexible, you'll be better off because if things get tight, you'll be able to have the flexibility to enjoy retirement with a lot less spend profile than what you were hoping for, at least at the time that you're seeing the down market. So with that, the question for you, and I'd love to hear from you on this, is are you going to do it? Are you going to pull the trigger and actually retire now? I'm really wondering, said yes to all this stuff and still are saying, no, I'm not going to do it because of the fear I have of all the unknowns. That's fair. I'd love to hear about that. Or you're saying, you know what, I've checked all those boxes. Financially, I'm ready. Mentally, I'm ready to go challenge myself in a new frontier in retirement. I'm going. Would love to hear that as well. All of these are positive things. Whatever you choose is your choice. I will say that we've jumped, that we're here in retirement. We are loving it. Sure, the market's up and down. I've planned for it. We're off to go do a new adventure, and we'll be talking about it shortly. So life is good on this front. We know that life is short. Our health is good now. Can't guarantee that forever. We want to take advantage of it, and I share that with you. Stay healthy because it's critical. No matter how much money we all put away, if we're not healthy, we won't be able to enjoy it as much. So with that, just remember, always save more today so you have a much better tomorrow. That's all for now. See you again soon. Bye.